those were all of the top headlines that we're tracking this morning, and we will get to all of those stories in just a bit. But first up, let me take you through what's happening as far as the global markets are concerned. Let's start with Asia, where, it's looking largely red, at least as far as the start is concerned. So Hang Seng seeing losses of over 300 points right now, it's 330 points lower. Nikkei also seeing losses of over 200 points, so both of those looking quite weak. And for the rest of the Asian markets also, it is looking like a start in the red, barring only Taiwan. And this is for the second day that Taiwan seems to have been the only Asian market which has opened in the green. So that index, you can see, is around 0.3% higher. The SGX Nifty will also come up for you. It is indicating quite a flat start for our markets, so we're just around 11 points lower as we speak. That's what's happening as far as Asia is concerned. But let me also tell you about the US markets now. Wall Street ended Wednesday's trading session lower. So the Dow Jones was down around 200 points. S&P 500 was down around 12 and the Nasdaq was off 52. CNBC's Kate Rogers gets us a wrap of all of that action.
U.S. markets ending the day lower. The Dow off 211 points, the S&P down 12, the Nasdaq sliding 52. Target shares falling about 5% despite beating expectations for the third quarter. CEO Brian Cornell says the company is absorbing some of the higher costs it's seeing rather than passing them on to consumers, and that could have an impact on the company going forward. Business travel demand is expected to surge in 2022, but a full recovery is still about 2 years away. That's according to a new industry report. Business travel spending rose more slowly than expected this year, according to the report, slowed by COVID variants, uneven vaccination rates, and case surges. And shares of electric vehicle maker Rivian falling 15%, ending its week-long rally since its public market debut last Wednesday. Rivian quickly surpassed the market value of GM and Ford, but it still lags far behind its rival Tesla. That's the action from the U.S. market. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of that action. That's what's happening globally. But how will all of these overnight cues impact our own market? We have our research team joining in to tell you exactly that and to prep you up for this trading session. Rima, Nupur and Agam all join me now. Hi guys, a very good morning to all of you. Rima, let me come to you first. We saw cuts of around 0.5% on our frontline indices yesterday. What are the cues that we should watch out for this morning?
Well, I just want to at the start say, don't get fooled by what the SGX Nifty is suggesting, or it does in the first half of the trading session, because what we've seen in the last 2 days is that selling is coming through in the last 1.5 hours of trade. So, on Tuesday as well as on Wednesday, the Nifty slipped about 100 points to close at the day's low, and all that selling pressure came through in late trade. As you pointed out, Asia is actually on a weak footing this morning, so it's across the board, it's red, barring the Taiwanese markets. And for our own markets, both the FIs and the DIIs have sold in the cash market. The FI selling was 344 crore in cash. The DII selling was 61 crore. But it's the first sell figure which is coming through after 9 days of buying. So that's a trend that we will be watching. Focus will be on Paytm IPO because that's the biggest one ever. 18,300 crore is what they raised. And the grey market premium is suggesting a tepid debut. In fact, the grey market premium is not even suggesting fireworks for Sapphire Foods, which will also be debuting on the stock exchanges. Sapphire Foods is, by the way, the KFC as well as the Pizza Hut operator. Global markets, in terms of the US indices, they closed lower. The Dow was down close to about 0.6%. But the global macros, movement overnight are actually positive for the Indian markets, whether it's Brent crude prices, which have slipped to $80 per barrel mark, or the US 10-year yield, which is eased to levels below 1.6, or the dollar index, which has failed to hold above the 96 mark. So all these three indicators are actually positive for the Indian markets. For starters, the SGX Nifty is mildly lower. It's pretty much a flat start. Focus will be on Paytm at 10 a.m. But we'll watch for how the second half of the trading session plays out, because this is the pre-expiry week. So generally, you do see some amount of volatility as well. Back to you.
All right, Rima, thanks a lot for getting us all of those cues. So like Rima pointed out, it is looking like a slightly flat start, but we will have to see how the rest of the trading session pans out. Let me also hand it over to Nupur now. Nupur is tracking the entire list of stocks that we should watch out for in today's trading session. Nupur.
Well, Pavitra, with an end to quarter, the list of stocks have shrunk, but important news flow-based stocks will continue to remain in focus. First up, an important one on my radar this morning is Vedanta. As company constitute board committee to evaluate value unlocking measures. The committee to evaluate all options, including demerger, spin-off, strategic partnership, as company aims for demerging and listing of aluminium, iron ore, and its oil and gas businesses. So keep an eye on that. Moving on to then yet another important story, as Scott's where board will meet today to consider fundraising via many options like bonds, NCDs as well as QIP on private placement basis. Phoenix Mills, where CPP completes first tranche of its investment in company's arm worth 790 crores. Kalpataru Power Transmission will also be in focus as ICICI Prudential Asset Management acquired 0.19% stake in the company and now increasing its shareholding to 5.18%. Jubilant Industries, where Crystal Gate ratings upgrade as well as kept outlook stable, so watch out for that as well. And as Rima pointed out, crude fell to $80 per barrel, so OMCs as well as paint companies will back in focus today. And lastly, as you all been pointing out, Paytm as well as Sapphire Foods will list today, so we'll watch out for that as well. Back to you.
All right, Nupur, thanks a lot for that. Absolutely, Paytm is all that anybody can talk about. So we will get you more on that in just a bit. But before that, Agam is standing by with all of the cues from the FNO space. Hi, Agam. Good morning.
Good morning. We did see the benchmarks come off to quite a certain extent yesterday, and that was followed by unwinding in the index futures. So the Nifty futures saw about a 1.5% decline in open interest. Similarly, the Bank Nifty futures also saw about 4% decline in OI. Moving on to what FIs have done in the futures and options space, specifically index futures, they have added about 2,800 contracts towards the long side, but they've also added now another 1,600 contracts towards the short side. So it's fairly evenly split. At this point, not too much change in terms of the percentage longs at around 54% for FIIs. In terms of the most active options yesterday, it's 17,900 put and well, the 18,000 call. Well, naturally, today is the weekly expiry, so we will see some amount of volatility, but we are not expecting them to see a very wide range, really about 100 to 200 point range in today's day of trade. Finally, coming down to the Nifty put call ratio, that has come off even further to now 0.81 against 0.86. The further it moves lower, the more oversold a market tends to be on a historical basis. And in terms of stocks, keeping an eye on Apollo Hospitals and Birla Soft, which saw fresh longs, and we did see long unwinding in Chamal Fertilizers and MCX.
All right, Agam, Rima, Nupur, thanks a lot for joining us and taking us through the trade setup this morning. Welcome back. You're still watching Power Breakfast on CNBC-TV18, and let's get straight to an exclusive now. The government could miss its FY22 divestment target, and government sources also tell CNBC-TV18 that the situation is tight on the BPCL divestment, with no clarity on when the financial bids will come in. Sapna Das, my colleague, is here with more details. Sapna, what are you picking up on this story?
BPCL disinvestment, the sense that we get from government sources, the fact that they are not in a position to indicate when are the financial bids expected, which month. There is no indication, they're not in a position to do that. So that's one. Within that context also, we got a sense that maybe it's a very tight position, a very tight situation as far as the BPCL divestment is concerned. So maybe the financial bids will come in the current financial year itself, maybe in the last quarter sometime, but maybe the transaction will spill over to the next financial year. Now, if that happens in that context, again, the 1.75 lakh crore divestment aim set out for this financial year, it's going to be impossible to achieve that. As it is, the government has mopped up not even 20,000 crores out of that. So that also is another element that we need to keep in mind. Last but not the least, again, LIC IPO, because that again will be important in terms of at least the divestment money that will come in the current financial year. Here, the government is very confident, clear indication that they will do the listing in the last quarter of the current financial year, of course, and plus they are also waiting for the embedded report to come in terms of deciding the valuation for the IPO. In the meanwhile, earlier in the day, the Disinvestment Secretary, Mr. Tuhin Kanta Pandey, addressed the industry. Let's just listen to what he had to say.
Not only Air India, but also the BPCL is in due diligence stage. We have now several of other things have come into, for example, BEML and the Shipping Corporation of India. Then we have Pavan Hans, we have a Central Electronics Limited, we have Nilachal Ispat Nigam Limited. These are the transactions which we think that financial bidding can take place in December, January.
All right, that was the Divestment Secretary, Mr. Tuhin Kanta Pandey, saying that the BPCL divestment is still at the due diligence stage. But moving on to another important story now, Vedanta has constituted a panel to undertake a comprehensive review of its corporate structure. They have plans to evaluate all options, including demergers, spin-offs, and strategic ties. The company says the exercise is aimed at unlocking value, creating businesses better positioned for long-term growth, and attracting deeper investor bases. Nigel is joining us with all of the details on this. Nigel.
Well, in November so far, the metal index is more or less flattish, but Vedanta has outperformed. So maybe the street was snipping some kind of corporate action that's coming through. Well, let's get straight to the news then. Vedanta has constituted a committee to look after value unlocking measures. Now, they could be looking at housing the aluminium, the iron and steel, as well as the oil and gas businesses under the standalone listed entity. And so for this purpose, well, they've constituted a committee which could possibly look at a demerger or a strategic partnership with a view to unlock value as well as simplify the group structure. Now, the EBITDA breakup for you should come up for you on the screen. That's for the past quarter. But what stands out is that there is no mention of the zinc or the copper business at Tuticorin, which has been shut for the past few years. Now, in the second quarter FY22, well, the Vedanta management had hinted at a possibility of divesting the zinc international business to Hindustan Zinc. Well, they also told us here at CNBC-TV18 that there could be various synergy benefits between the entities. Now, the likely reason is that Vedanta has been looking at ways to increase the cash flows to its parent, that's Vedanta Resources. So, is Hindustan Zinc buying out Zinc International from Vedanta Limited an option? Well, time will tell. But the key focus will be Hindustan Zinc's cash balance of around 19,000 crores. Now, if some part of this cash moves to Vedanta Limited, then they can look at paying a dividend to shareholders, and Vedanta Resources will then be eligible for around 65% of the total payout that's in proportion to its holdings. Currently, remember, Vedanta Resources receives only 42% of the dividend that's declared by Hindustan Zinc. Another possibility could be Vedanta uses this cash to do a buyback, which will further increase the promoter holding in the company. Keep in mind, in the past year, there has been an attempt to delist the company. The promoter has bought shares from the open market, and also there's been an open offer. Well, the street will be waiting with bated breath for the outcome of the value unlocking exercise. As we have seen, though, in the past, anything can happen with the group. A demerger is now a possibility. That compares with the few mergers that were done in the past few years. So this stock opens up in the green, but there are a whole host of expectations. Let's see what comes out. Back to you.
All right, Nigel, thanks a lot for getting us all of the details on this story. It'll be interesting to see how this stock fares in trade. Like Nigel pointed out, this is a stock which is already up 11% in the month of November versus the metal index, which has been largely flat. Welcome back. You're still watching Power Breakfast, and let's talk about what's on everyone's mind this morning. India's largest ever public issue, the 18,300 crore Paytm IPO, is set to list at 10 a.m. today. Yash Jain joins us to tell us a little bit more about the issue. Yash.
Well, the day has finally arrived. The biggest IPO Indian capital markets have ever seen. Paytm's 18,300 crore offer is set to list on the exchanges today. As I said, 18,300 crore is the total size. 10,000 crore would be the offer for sale, which would go to the selling shareholders, and about 8,300 crore would be raised through issuance of fresh equity. That is what will come into the company. The price band for the IPO was set at about 2,080 to 2,150 per share, and the company is expecting a post-listing market cap of nearly 1.4 lakh crore rupees. Now, how does Paytm use this particular money which it raises? The company says that it would be using about 4,300 crore rupees towards growing and strengthening Paytm ecosystem, and about 2,000 crore rupees towards investing in acquisitions and strategic partnerships. Speaking about the subscription numbers for Paytm, they were certainly not as impressive as the size of the issue. The offer managed to scrape through on the last day with a total subscription of about 1.89 times. The QIB portion subscribed 2.79 times, HNI subscribed at just 0.24 times, and finally retail subscribed at 1.66 times. Another interesting fact was that 99% of the bids under the QIB category came from FIIs, and 86% bids under the HNI category came from individuals other than retail investors. A quick look at the positives for the company. Paytm is India's leading digital payment service platform. The company has a huge customer base of 333 million and about 114 million annual transacting users. Finally, it has 21 million registered merchants. If India's mobile payments between FY21 to 26 is expected to grow at 5 times, then Paytm would certainly be the biggest beneficiary. There are also some concerns as far as the issue is concerned, and important to highlight, the company is loss-making and has incurred negative cash flows in the past. The second concern, as per many analysts, is that majority of the revenue is earned from a single business, that is payment services. And finally, the most important thing, valuation. The stock is demanding valuation of about 49.7 times FY21 price to sales and about 23.1 times FY21 price to book value at the upper end of the price band.
All right, Yash, thanks a lot for getting us all of those details and numbers. Remember, the grey market premium for Paytm indicates a bit of a tepid listing. So let's see how the street takes this mega IPO and the mega listing that we are going to see today. But with that, we move on to our commodities segment. Manisha Gupta joins us with an update. Manisha, it seems like there's been quite a significant drop in the crude prices.
It is, Pavitra, yes. 3% of a decline overnight, and we are down by 5% now in the previous week itself. The crude oil prices as of now are now trading at a 6-week lows, and we've seen $80 break quite easily on the lower side here. Various things. Well, the major one is that the U.S. is asking China and Japan to consider a coordinated release of oil reserves. The U.S. itself is considering oil release from the SPDR reserves, and that seems to be weighing in. This would mean that a lot of oil could come into the markets. Remember, this hasn't been agreed on as of now, but the way all of these countries have been talking about more supplies required, this perhaps could be the next step. The markets also do believe that the next couple of months are going to be critical, but after that, OPEC and IEA both have said that the global inventories or the global supplies will increase. So the crude oil prices in the near term and the longer term are headed on the lower side, is the view coming in from the global agencies as well, and that seems to have marred the sentiment.
All right, Manisha, thanks a lot on getting us a quick update on the crude oil prices. With that, we're completely out of time on this show. The SGX Nifty is just run 10 odd points lower, indicating quite a flat start for our markets. We wind down on this edition of Power Breakfast. Thanks for tuning in. Bazaar Morning Call will take all of this action forward.